Hey everyone, welcome back to Nadlin Forum Podcast Daily. I'm Ruby and I've got Lior here with me. Lior, can you believe we're still talking about mortgage rates holding at these wild historic lows? I swear, it's like deja vu every week lately.
Yeah, Ruby, I know what you mean. It's kind of uncanny, honestly. Right now, lenders are offering rates that are, they're just a touch above the absolute lowest in 3 years. Even with all this market volatility and noise in the background, rates just refuse to budge. I've got clients who are almost suspicious, like, is there something I'm missing? But no, it's mostly just like this really rare calm.
It's weirdly calming though, right? Last episode we talked about how even small policy changes or shifts in the bond market can send ripples everywhere. But here we are with almost nothing happening. The 10-year Treasury even dipped under 4% for a bit. That's supposed to be a big deal. Yet things just kind of settled in, like everyone's just chilling, waiting for something dramatic to happen.
Exactly. And the thing is, this isn't normal, not for the US market. Usually something as basic as a bad data point or some Fed comment would push rates around. But at the moment, with all the major economic data on pause, the government shutdown and all that, the main things influencing rates are secondary headlines. And I'll give you a quick little story. Last week, I had a client who's been watching rates for months. He jumps in, locks in a refi, and then literally says, Lior, I was waiting for chaos. And instead, I got a nap. That's how rare this window is. People waiting for an earthquake and it never shows up. It's just silent opportunity.
That is so good. I just love that. Waiting for chaos and getting a nap. Seriously though, it fits. Because for buyers and refinancers, this is like a breather. You're not worried about waking up to a rate spike. Everyone's had that moment where the market lulls you into a sense of security. But I feel like whenever things feel too easy, something's brewing.
It's like when your kids are very quiet somewhere in the house. You start to get nervous. That's how I feel about these rates. But right now, buyers and refinancers, especially those who locked in earlier this year, are feeling pretty good. This type of consistency, it almost never lasts.
All right, speaking of things brewing, let's talk about this bizarre data drought. Everything's on pause with the government shutdown, so you've got investors and analysts basically making it up as they go. Without those jobs reports or inflation numbers, it's like driving with your eyes half closed.
Yes, you nailed it. So when there's no official data to guide, everyone starts looking at, the little things, like those new tariffs that went into effect, or headlines swirling around regional banks. Usually those would barely make a blip for mortgage rates. But now, even something small can swing things, because that's all the info anyone's got to work with.
So it's like every little scare or headline becomes this big deal. Even like tiny bank drama or just a whiff of tariffs can set the tone for the whole week. But then, flip side, isn't that risky? As soon as the big data comes back, markets could move super fast. I keep thinking of times we've seen fast swings just off a headline, and that's with data flowing normally. What happens when the pipeline turns back on?
Yeah, that's what worries me too. We've talked in previous episodes about how info gaps create, almost artificial calm. Like after the shutdown ends and suddenly the jobs numbers hit, CPI comes out, boom, we could see major swings. Even now, some folks are starting to notice signs the bond market's getting, tired. There's that market fatigue coming through after weeks of steady gains and no real direction.
So it's sort of like, okay, I'm going to try a food analogy, which I probably shouldn't. They're nibbling on snacks, waiting for the meal. When the meal hits, you'll know it. But it's true, these periods of calm, they almost always get broken up, and sometimes by stuff nobody was expecting at all.
Absolutely. And it's important to remember, the longer the calm, the sharper the move can be when volatility comes back. The market right now is it's hypersensitive to anything. And that's not a long-term recipe for stability. So, where's this all going? Honestly, analysts are saying we may see a bit of a tick up in rates, especially if people decide to take profits, or if the first rounds of real data surprise anyone. And Ruby, remember how we talked about refinancing picking up speed? It's happening again. FHA and conventional refis are way up because a lot of people who locked earlier this year just want to cash in on this weird window.
Yeah, I heard about that. It's like everyone suddenly realized, wait, these rates aren't going any lower in the short term. Let's just go. You know, it reminds me of that episode we did about the surge in arms and all the strategic moves people try to make when the market is this flat. But you can't just assume this lull is here to stay.
Exactly. It's smart to move, but it's even smarter to be ready for things to get bumpy again. Once that government data is coming back online, things could shift really, really quickly. If inflation runs higher or the jobs reports are off, we could see rates go up even sharper than before. So, anyone thinking of borrowing or refinancing, just stay close to your lender and don't drag your feet.
Couldn't have said it better. And really, I think the big takeaway is enjoy this calm, but don't fall asleep at the wheel. Big data will come back, and when it does, things might get weird again. Anyway, that's all from us on today's episode of Nadlin Forum Podcast Daily. Lior, thanks for the stories and all the insights as always, mate.
Thank you, Ruby. Always a pleasure. And thanks to all of you for listening in. Let's keep our eyes open for when those numbers finally start rolling in again. Until next time, have a great day.
Catch you later, Lior. Cheers, everyone. And don't forget to subscribe so you don't miss when things finally get interesting again.